The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Checking out where the S&P is at right now. We got the S&P at 1943 right now. It's down 7 points. We got the Russell down 6. Nasdaq down 1 point, and the Dow is down 100 points on the day. So big move there on the Dow. Out of the group, it's the leader in the negative territory at the moment. We got copper is currently down about 0.5%. We got gold pretty flat, up 40 cents. Silver pretty much unchanged on the day, just up 0.002. We got natural gas is pretty flat on the day, up 0.15. We got oil down 0.05, just down 5 cents on the day right now. And I was just reviewing over and looking at the magnet pricing analysis we did yesterday on oil. And just to show you basically what we did is we had the, this was a high that got broken through and it came back down. It became a magnet low, so I put a little dot there. And then we got the magnet high that was set yesterday. And then we had a previous magnet high that has been bounced through but not really taken out completely. And so you can see it sort of, oscillated right there, but it's been staying right around these magnets. And guess what? We're at the exact same magnet we were at yesterday. So right there at 104.17. So we still got that move, that big move we're looking for. And didn't really get it today, but we'll see if we get it by the end of the week. But we have basically two target prices. We're shooting for 105. We're shooting down here for 102. Basically 70, 75 here. And so I got contracts looking at both directions, and by Friday, we'll see if we get it. We'll see if it stays flat. But I would not be surprised if we did. We were able to catch that before it was all said and done, and get one of those two being hit before the week is out. So those are our two target prices right now. That's being really drawn in by that magnet at 104.50, and there's, like I said, a smaller one there. Right there at 104.20. So it really needs to break below to get down there. It's going to have to really break below this level with some pretty hardcore volume. And we haven't had that happen yet. But if it can, there's not really much to stop it after it breaks on down. So there's not a lot of volume in between these two levels that is going to slow anything down. So really we just need that move, and we get a nice drop. And so that's what I'm shooting for. And how am I doing that? I'm using Nadex, okay? So Nadex, if I go over to the Nadex platform, if you don't have access to Nadex yet, you definitely are missing out. You want to check that out. Nadex is the North American Derivative Exchange. It's located in Chicago. It's regulated by the Commodity Future Trading Commission, the CFTC. It's the same body that regulates the CME. And, COMEX and NYMEX and CBOT and all that fun stuff, all being regulated. Nadex is under that same group. Your money's here. It's segregated. Your funds actually segregated from the company, so a creditor does not have access to them. They're even more tighter regulated than a simple futures contract. They're classified under a swap for, they're a future option. But as far as regulatory classification for how money's handled, it's classified under the swap regulations, which is a lot stricter, especially after 2008. And so that's a good thing for you. And anyway, so you can go over here, and you can click on Nadex, TFNN.com right there. Click on the Nadex banner. Go to Trading, click on Demo Trading Account. And once you do that, scroll on down. You'll see your demo, your first name, last name, phone number, and email address. From there, you'll be able to basically choose whatever it is you want to, but you can just, whatever username you want, click apply for demo. They'll then send you a email with a password in it, and you'll be able to access your account right away, and you can log in and start seeing what all this is about. Once you've done that, scroll on up to the top, and that's where you can log in. It'll be log in right here. You can check out their education under, trading webinars and stuff like that, but also over at TFNN, go over to the Tiger TV section and check out the archives of Channel 7 and Channel 8, where I'll go through different trades. Sometimes we'll do some live trades, especially on Fridays, and so check those out. Also, we got the the box spread analyzer and scanner that you can check out, and I go through, and also have now includes the binary scanner with it, and has a lot of educational videos that I've made, specific step-by-step, like 15-minute videos going into stuff where to get you going. That demo account is going to expire after a few weeks, so you want to get that thing going. The fastest way to get it going, there's all sorts of little hoops you can jump through, but if you want the simplest, fastest method, go to open an account for free. Fund the account with a $100 minimum deposit or more, okay? But a minimum of $100, and place one trade or more of any size. So at a minimum of $100, at a minimum one trade, like say $3, risk on a trade, whatever. You do one trade, fund the account. Now again, you may put in 10,000 in, you may do 40 trades, you may do 100 trades. But if you do at least a minimum, email them, customer service at nadex.com. Let them know you have a live account, you have a demo account, you funded your live account, you placed your one live trade. At a minimum, you placed at least a live trade, and you would like to go ahead and get that demo extended for 12 months, and they should do it for you. Okay? So, anyways, that's the fastest way to get that taken care of. Not just opening it, not just funding it, but actually doing a trade. And then all of a sudden, boom, 12 months. So, that's the last I heard. That is the fastest way to get all that accomplished. So, if you want to do it, then there you go. And I do recommend that you do have that demo account. Not only for extending out the demo so you can track your results, so you can test ideas out, test things out. And, as I go through things and I'm teaching you different, ways to trade, you can demo them. You can learn the intricacies. Don't just go in and just start following and clicking. And I know I see many people doing that. I don't know if they're people who've been following for a long time, if they just happen to follow that day. So, they only do half the trade. I saw that the other day. One trader only took a short. I put on a short and a long. The long actually went in and made some money. The short hasn't yet. So, only doing half the trade can be detrimental. But anyways, definitely learn. The best way to learn is to hop on over and get that demo account going. And it's a safe way to learn. Let's see. So, what did we have coming out today? And let me bring that on up. Also, let's catch out on where the other markets are sitting at. I got you through to oil. Got corn and soybeans pretty flat, down 4 and 7 points respectively. And so we'll look at those. I think they were on our news plan coming on up here. We got a euro dollar is down 15 pips, basically nothing. Right there, we got the Aussie dollar up 23. We got the pound dollar up 49. Dollar Frankie is flat and changed on the day. Looking over at dollar CAD, it is down 33 pips. Dollar yen is down 39. Aussie yen is down 14. Euro yen is down 64 pips. Big mover on the day. We got pound yen down 13, and we got euro pound down 32 pips on the day. All right, so what do we have on our news calendar? What are all the trades that you could have been looking at today? We had a lot of be aware, hey, the Aussie may be moving, stuff like that happening last night, but let's go into today. I'll bring it all up, and we're going to walk through it for you step by step. So we got a few minutes here. We can get some of that caught up, and then maybe we'll do some additional analysis over on, let's see, that's the wrong report. I don't want to bring that one up. We can do some additional analysis on some additional magnet pricing. And just keep building some of those up here, okay? And let me see. Okay, we can use this one. I'll clean this chart up a little bit here. Move it on down. 4 minutes. This is just to do the news review. And we'll go on over. We're going to pull up. Last night we had just the warnings to be awares again. Over on the Aussie, they had the consumer sentiment report come out. Can't really trade it, because there's not really a forecast on the number itself. So, but we can at least look at it and know, hey, you've been looking at it. Did it move at all or not? And then we'll go into the stuff we had this morning. We had the pound unemployment rate. We had some wage reports. We had some, remember I said, we don't necessarily have the actual annual impact on that. So, on this one, but we still do have the major crop progress reports happening. And let's see here. Let's bring that up. We'll look at it and see how it all moved. All right. So pretty light on the volume on the Aussie today as well. Got one little spike right there. And if I pull it up, I'll go over to, there's 100 different websites. But 9:30 last night, that's going to put me right here. Here we go. We got a big spike. Okay. Massive spike in volume comparatively against everything else. And, but that was a little bit later in the evening, so I'm not even quite sure what that was about. But it did push it on up there. But if we take it on down to 9:30, that's going to put us at 21:30. Usually we get a lot of volume right at this time because there's a lot of Aussie news. It's like it didn't even happen. So, let's see. I'm just trying to see what we got on that. And, yeah, it actually was at 8:30. So they moved it at 8:30. Okay. So it'd be 20:30. There we go. We got a little bit of volume. Still not that much. Very little activity. It's basically it's still like the report didn't happen. Then there was a little bit of news that came out later that night. And something happened right here. I could go back in Monday morning quarterback. It didn't really matter. Still didn't have a big, massive impact on the market. Though it looks like it did drift up for a little bit. And then just really a quiet day. I mean, this orange line right here, this is where we expect volume to be. And you can see we're not even hitting that on a consistent basis. So that's really low expected volume. Usually I see a lot more than that. I have it on 5. Usually I put it on 4. Let me change that back over. And I'm about to doing some other analysis looking at 5-minute bars. But going right over here, checking that out. All right. There we go. And bring that back up for you. And but yeah, Westpac consumer sentiment, no massive problem. We got a little bit better on the volume, bringing it down to 4 minutes, but still, I'm looking for more than 1 out of 5, like 2 out of 5, 3 out of 5, 4 out of 5, hitting or exceeding volume, and we're not getting that. So just a low flat day right there in the Aussie, all day and all night. Really just when you see this, it's this butterfly city right here. Got your butterfly nets, use that little close to close section, and just start grabbing them right in between. So that's the easiest way to get them. All right, we'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And so just going in, looking at some trades, like I said, the Aussie dollar, pretty flat. And I was mentioning that butterfly net, and somebody sent me a private message, like, what do you mean by butterfly net? So basically when volume's really low, and you're really going to pay attention, you got to be watching, because, of course, that can change. You start seeing some volume spikes happening, you need to back off, right? But when volume's really low, I look at the close-to-close ranges. And so what I do is I look at, what's the expected close of the last hour to the close of this hour, up and down. And so when I see that volume is not hitting expectations over and over again, then I'm like, okay, boom, I'm going to go ahead and I'm going to buy the binary right at the low of this close. I'm going to sell the binary up here at this close. And just looking for it to stay in that range. It lets me get as close as I possibly can get on the trade. So there's another one right there, traded at the top of the hour. Grab that one. Now, if it feels like it's a little bit too tight, then what I can do is I can go in, and let's just say, man, it's like, well, I'm just not able to get the premium. I mean, it's just so low right now. What could you do? I'll go in here, and I'm going to check out my expected ranges. I'm going to double them on up, okay? And I'm going to say, you know what, we're going to go ahead and go to 120 minutes. I'm going to look at what are the expected movement on a 2-hour time frame. And so by hopping over to a 2-hour time frame on my close and high to low, then I can start them out 2 hours in advance. I can still do them every hour, but I'll do them for the 2-hour binary. And so I could also look at 90 minutes. So you can really start playing with it. There's a lot of ways you can do it. But just to show you an example right here, then we'll hop on, we'll get some others. But, basically just looking at it for it to stay, inside, to close inside. And let's see, is there a single one today? Yeah, if I went in, I started on, and you may have to do another set of them, by the way. You may have to double up on these. The reason I say that is because, this will give you even hours. So if I want to get the odd hours, I'm going to have to go in here. I'm going to have to add them twice. Expected range, add that on. Expected range, add that on. And then I need to hop on over. And again, I got to do 120 minutes. Okay? But I need to start it 60 minutes later, so it'll expire on the odd hours. All right, and that gives me a high to low. And then I go over here, do the same thing, except we're going to change this one to close to closes. 120 minutes. Start this one 60 minutes later. And then I always make colors transparent down here at the bottom. So try to just get rid of all the colors on here. And because I only need them for the ranges. And let's see, what do we got? We got right here at the top. I think the very top, it doesn't do that on that one. Okay, so we'll just type in transparent. And then make that one transparent. And scroll on down, see what else is here. I think that'll do it for us. I don't think we have to worry about the other ones, but just in case, it's going to make them all transparent. All right. Now I click OK. Now I'm going to get both expectations of ranges. The ones for the even hours, the one for the odd hours. Don't need to do this when I'm doing 60 minutes because I always have it, right? But when I'm doing, 2 hours, everything's going to be like 10, 12, 2, 4. Well, I may want that, 9 and, 11 and 1 and 3. So this will let me see them on a consistent basis. I can go through and go, okay, well, if I want the 11 o'clock one, then where does that one end? Where does the other one begin? And I can look at that. You can even change the colors up to make it a little more easy to read. But you can tell, definitely staying inside my close to close over and over and over again, at least on the expiration. And you'll be amazed how well this can work out for you. So it's a pretty simple strategy. And it's one that you most often will execute on a lower volume day. On a high volume day, a lot of times, you may get the breakouts. But most days are, not massive volume days. Only about, the market, an amazing amount of time will stay in a range. It'll trend like 30% of the time. So most of the time, it's really staying pretty flat. And due to that fact, that makes butterflies a great trade for consistent day-to-day trading. And so I can click right here. Here's the range. Stayed within my range. I go here. Next hour, 10 o'clock. Stayed within my close to close. Look at the 11 o'clock. Stayed in the close to close. Look at 12 o'clock. And the close to close. Look at 1 o'clock. It stayed again. Right. It sort of broke out a little bit, but it expired inside my close to close. So definitely learn how to use a butterfly net. It'll help you out. All right. We'll go through. We'll check out the other news reports that came out today when we get back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So a couple reminders for you on these butterflies. If I go in on a trade, and let's just say, I mean, this isn't a great example, but let's just say I was going in and I was buying a lower strike, and I'll bring up, somebody brought up the Russell. So I'm going to pull the Russell up. We'll look at that real quick. We'll keep going. We'll get on to all these news reports. But I just want to bring it up and talk about it real quick, since it's one of the topics of the day. You got a lot of flat days, so you need to know how to make money on those flat days, those flat nights, right? And that's where that butterfly net really comes in handy. That's why I made, the whole reason I focused on getting that close-to-close number was for butterflies. So if I come in and I buy, a lower strike down here of, whatever it is, let's just say, 11, I don't know. I'm just, let's see. We'll zoom in a little bit. Try to figure out exactly where we are. We're actually pretty low already. This would be a hard one to do a butterfly on at the moment. But I guess if you got in, you use this lower range. I'd be a little bit late on getting on that butterfly. But if you did that, the idea is actually you get in at the beginning of the hour. But let's just say you did that. You got in at 1163. And then we need to push this thing up to, I guess you're looking at about 1169 on the other side. I'm not quite sure what side that trader was looking at. Okay, let's just say this is a trade you had right here. All right, which would pretty much be the range. That's 6 of the 9 points they do. And let's say you bought the lower one for $90, okay? And you sold the upper one. Okay, so they're looking at right now. They just sent over to me. Appreciate that. Okay, so they sold basically the 1168 or 1167.9. All right, so they're not exactly doing what I'm talking about, first of all. Okay, they're getting in a little bit late on the hour. So let me go ahead and mark it, though. 1167.8. And then went in and bought the 1163.9. Okay. So, and they're looking at the 2 o'clock expiration. They got in at 1:30. All right, so what we want to do on this is, one, you want to get in like at the top of the hour or maybe even 2 hours before, okay? Because the more time there is, the more profit potential, okay, there will be in that butterfly. So you'll be able to get more premium further away. So only 30 minutes to go, not going to be a whole lot of premium in there. So that's the first thing I want to point out is time is your enemy, but time is also your friend, okay? It's your enemy because it gives more time for things to happen. But again, that's why we're doing it on a low volume day when the market's not exceeding volume a lot, okay? Time is your friend because it'll push that strike further away for you and give you more premium at the same time. So that's why I like doing it on low volume days. So time isn't necessarily a big worry because most of the hours we're staying inside that close to close. So we're inside the close to close on that hour, on that hour, on that hour, on that hour. I mean, over and over again, every expiration this morning, we have expired inside the close to close so far. So this might be the exception. We'll see. Now, this is a close to close for a 1 hour. Remember I said we could do 2 hour ones, get in 2 hours out, and I guarantee it'd be wider, and we'd definitely be in it right now. Okay? So, but just show them 1 hour. But let's just say this is a trade you did. Let's just say you did it right. You did it at the top of the 1 hour, the top of the 2 hour, whatever. And you basically bought the lower one for $90. That means you have a $90 risk, a $10 reward. You sell the upper one for $10. You got a $10 reward, a $90 risk. Well, it can't both expire above here and below here at 2 o'clock. All right? It's not going to be at both of them, no matter what. So, one of them is going to win. Let's just say if you leave the thing on, or if you close both of them out when one of them loses, no matter what, one of them is going to be profitable. And one of them, and maybe two of them will be profitable. But at least one will be profitable. Because you can't expire at 1169 and 1163 at the exact same time. So if I'm risking 90 on one side, the most I can lose is 90. If I can make 10 on the other side, and I'll make that 10 if the other one loses 90, then I'll make 10, I'll lose 90, I'll net a $80 loss. So now I'm at a $80 loss on a $20 profit potential. That's not fantastic, but it's just important to understand that you're not risking 90 to make 10, you're risking 80 to make 20, okay? So you have a, 4-to-1 risk to reward versus a 9-to-1 risk to reward. That is definitely a massive improvement, okay? Now, so you understand that piece first. The next piece that you can do is, okay, what if I wanted to reduce my risk? Well, remember, the wider we can get this, the better this works. But let's say you were using stops, okay? So you're going to get out when it hits your strike. What is the binary going to be worth when it hits the strike? It's going to be worth $50, just to make it simple. Yeah, we can add a few dollars in there just to make it simple, $50. So if I bought at 90 and I got out at 50, I'd lose 40. The other one's basically going to be worthless at this point. So most likely can close that thing out for, $7 of the $10. So I'm going to lose 40. I'm going to make 7. We'll just say, I'm going to lose 33 on a $20 profit potential. Now we're at getting really balanced on that risk reward. Okay? And so we're getting really balanced on that. And again, it's very important to understand that you buy the lower one. Okay, so we're buying the one below the market. We're selling the one above the market. We're selling the 1167.9. We're buying the 1163.9. I'm not even suggesting this trade. I'm not doing this trade right now. I'm just giving you an example of another trader who's sending me some stuff they're doing. But yeah, what you sent me is correct. Yeah, you bought the 1163.9. You sold the 1167.9. That means you expect it to stay inside that range. So you did it right. They're like, am I backwards? So you did it right. You're saying it in that range. So because remember, I'm buying this, say it's going to be greater than the strike. When I'm selling this, it says at or less than the strike. So that's why I want the one below and the one above. I think it's going to be in the range. And but by putting those pieces together, okay, by understanding that, okay, so I started off with a $10 reward, $90 risk, but then I combined two of them. Now I went to a $80 risk, $20 reward potential. And then I added in a stop loss if it hit. Now I went to about a $30, $35 risk to a $20 reward potential. And that's actually not a bad risk to reward on a neutral strategy based on the market not moving, meaning it can move up, I can make money, as long as it doesn't move up too far. If it moves down, I can make money, as long as it doesn't move down too far. If it stays flat, I can make money, as long as it doesn't stay, well, period. Right? If it stays flat, it stays flat. So now if it goes up too far or down too far and I hit my stop, I'll be out. Okay? Now if I don't have a stop and I just let it ride, per se, and it flies up and comes back in, I'll be profitable. And there will be a few trades you'll pick up and you'll be profitable on because of that. But remember, you lost 80 to make 20, okay? So that means one trade, right, just wiped out 4 profits. So I'd much rather have one trade, maybe wipe out 1 or 1.5 profits, and move on to the next trade. It's a lot less psychologically damaging to do that, and obviously it's a lot less financially damaging to do that. So it's like, take the hit and move on. Also, you don't have to do just one butterfly on one market. You can do some, you could do oil. You could do Russell. You could do, Aussie dollar. You can change it up a little bit. You can have some gold in there. So you can look at gold and natural gas and silver, corn and soybeans, and, on down the list. You can look at a variety of markets and just see where some good strike butterflies are. And this is really where you start getting into, like, you have all these charts up. You start looking at ranges and you want to start flying through charts. And you try to do this on anything besides the scanner, and you're going to be there all day, and the trade's going to be over before you get going. Okay? And so that's where you can go on the scanner. You can start pulling stuff up. That's also why, to get you ahead and get you ready, when you get about, say 10, 15 minutes close to the close there, I'm in advance showing the next ranges, the next close to closes. So you can know, wow, okay, next hour is actually a lot more volatile than the current hour usually. So on the Russell, 2 to 3 is much more volatile than 1 to 2. And just to show you what I mean by that, I'm looking at it right here, and look at our expected move. Okay, high to low. So right there, we gotta start over here. There we go. Expected move, high to low. About 4 points, and then we go to the next one. And we're gonna get, let's see here. Rule does not seem to like to work. Put it like that. And there we go. Okay, about 6.5. So about 150% more. I guess you say 50% more. So 4 to 6.5. So, but anyway, so large percentage greater movement expected over in the next hour. So volume should start picking back up a little bit, but doesn't matter. Go into those butterflies. Look at the 3 o'clocks right now. Okay, look at the 4 o'clocks. Coming up at the 2 o'clock. When the 4 o'clocks open up, look at the 4 o'clocks. Put their 2 hour close to close and high to lows on there. Okay, so you can see what that 4 o'clock will be. So you can look at the 1 hour 3 o'clocks right now. You can look at the 4 o'clocks coming up. And you can even look at the 4:15s. You can adjust the strikes to where it actually would end at 4:15 if you adjust the high to low and the ranges. But you're going to want to use the scanner because you're going to need the ability to look at multiple markets. If you're just sitting there waiting on, come on, this is a paint drying trade, okay? It's not a bad trade. It's just a trade where you're going to set it there and you're going to let time pass, okay? And So, if you're using the stop trigger function, you can always go in and put on that, that trigger price and the indicative to make it easy to manage the stops. Don't be manage multiple trades. But, I mean, this is like, okay, if I'm going to do the Russell, I'm going to be doing in-the-money only contracts. Right now, I'm just focusing on, intradays and current days. My risk is going to be greater than 50, right? 50, 55. I'm not going to want to take anything less ever than 90. And so I can put that on there, and I can scroll down, and instantly I can see these are the butterflies that exist for 2 o'clock, for 3 o'clock, for 4:15. Okay? So that's my 2s, my 3s, my 4:15s for today. And I go, okay, well, I got an 1163. Here's my really wide one up to 1168. For 2 o'clock, I got 1166 to 1164. Sort of floating in and out. Now, one thing you could do, if you actually were willing to take a $10 one, which I don't think necessarily is the best idea, personally, but if you were willing to take a $10 one, I actually put on 90 because I won't usually take the $10 ones. But if you were going to do that, you could put this at, like, say, 95, just for the purpose of getting rid of the 96s that are going to be on there. And so you can see, like, see how that's coming in and out by a quarter off the screen? So it's 975, and then 10, 975, then 10. I could be sort of watching that one contract to grab. So if I was wanting to get that extra point in there, but for $8 more, $9 more, I mean, I can go in and do a $19 plus a $15. I can do a $35 profit potential trade. And remember, if it hits the other side, I'm making, say, $15 to $20. And I'm losing 30. I mean, I'm only losing 10 to make, $35. So I can actually have a really good risk-reward trade by choosing about $15 on both sides. That's really my ideal scenario when I'm doing the butterflies. If I can get $30 in, if I buy at 85 and I get at 50, okay, I lose $35, but I made 15, right? On the other side. Well, if I lose, 30, $35, I lose 15, I'm losing 25. I'm actually making 30 if I win. Now, one profit would actually exceed one loss. So I'm very apt to take my loss quickly because I know, hey, if I take a $30 loss, I'll make $30 on the next one. Let's just keep going. Or I made $30 on the last one. And so that's why I like the $15 ones, because basically I can be right there at a 1-to-1 or better on a butterfly. So sort of the sweet spot is somewhere between $15 and $20 on each side. And anyway, so that'll make it pretty easy for you to find them. Now that's just looking at current day intraday. Now what if I want to look at multiple markets? What if I want to check out the Nasdaq and the Dow, and I want to look over at the FTSE and the DAX? I want to watch natural gas and crude. They're coming up here. Gold, silver, copper, they're out for the day. They already closed on their intradays and dailies. Maybe I want to look at corn and soybeans. Maybe I think they're spent for the day. I got Aussie dollar, Euro dollar, pound dollar. I got Euro yen, and US yen. I mean, those things are trading every hour of the day. And so now I scroll down here, and I can see every market. And I can see what's even worth looking at or not worth looking at. Like, I'm not even going to look at crude oil. There's not even a butterfly if I want to do one. Okay? So I can actually eliminate looking at natural gas. Let's just close that out. There's not even a butterfly available that meets my requirements. Crude oil, there's not one available. And that'll help me save a lot of time right there. There's not one for Aussie until 5 o'clock. Let's just get rid of that at the moment. And so I really start eliminating things, and I don't have to look at all the charts I think I might have to look at. And I can quickly find what I need to look for. FTSE, out. So DAX, out. All right, we'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And we're looking through the pound dollar right now, just checking that out from the news we had last night. Wanted to get you caught up on that. And pound came out at 430. We're looking at 11 to 7, hoping for about a 40-pip move. Let's see what we got. And, and you could hop in as late as 3, get in as early as 11 on the trade. And so if I back that out and go in on it, where do we get on the high side? We got about 45 pips out of it. And that was after the big move. Not really just a massive move there. Would have been nice to get a little bit more. That was from 12 o'clock. If we back it on up from 11, which was as early as you can get in, the latest you could get in was 3. So you would have given up quite a bit if you would have waited till then. But if you got it at the earliest time, then you got 58 pips. So that's not too bad. That was actually a decent little move there on that trade. Let's see. If you put in 40, you're going for, you wouldn't have necessarily, so got a 60 up, 40 plus 20 to the side. That would have been right at your 1-to-1 take profit. So it would have been very, very close on that move. As far as where did it end from there, let's check that out. So if you would have went in with $40 risk on the trade, if you would have got in at 11 o'clock and carried that thing through to 7 a.m., then you would have landed right about 31 pips up. So it would have been probably about a $10 loss on the trade, or you got a $40 profit on the trade. So one of the two took place. It's depending upon exactly when you got in that trade and whether or not you took profit. And you would have had a little bit of a warning there because you had that 0.5 deviation level. See that? So if you would have used that 0.5 deviation level when you're setting your take profit, I always tell people, look at the deviations when you're considering that take profit. Don't put it above it. Try to put it right below it. So that's why I have those zones. So like I try to take profit right before those. So I may end up going in for maybe a $35 profit on a $40 risk if I need to be able to net that thing out. But I want to get out before that deviation level. All right, so that's a pound-dollar employment. Now, we got weekly oil inventories. They came out today. So, well, we saw oil a little bit earlier, but we'll check it out again real quick. And then tonight, we got the GBP RICS House Price Index coming in. Flat trade. Looking for $20 or more in Iron Condor, 6 to 8 tonight on the pound. Then we're going to have the Aussie employment change, entering in around 9 with a 10 o'clock. Also, you can look at the 11 o'clock, looking for a really, really cheap straddle if we can get it for less than $40, hopefully much less for the Aussie employment change. Looking on, again, back real quick at the oil inventory report. What kind of move did we get? Was it within the expectations? And the oil inventory came out at 10:30. And we can see the move right here. Got a little wild movement going on. And pretty much got about 75% of the expected move on the day. Right there within that hour. And but nothing spectacular, nothing big to write home about. It did actually close outside of its close to close by like a tick or so. And but then the rest of the day has been pretty flat. So pretty quiet on the oil front with just about everything pretty flat. Tomorrow we're going to have U.S. Retail sales report. I went over all the trades on Monday in detail for you. Make sure you check that out. We're going to have U.S. employment claims coming out. We're going to have natural gas storage coming out. And let's see here. If we go in, we'll have on Friday we got the Big in Japan press conference coming on out. And then we'll have the U.S. PPI report. And that'll wrap up the week on the news. Make sure you're using that volume. Make sure it's you start to learn those butterflies with this lack of activity happening right now. It's a good time to learn them. Good time to get that Nadex demo account up and running. All right. Y'all have a great day. And stay tuned for another great show right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.